Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey everyone, good morning. Welcome back to another live stream. We are here. It is Wednesday. We have just a few days left of this week. And in terms of things going on, it's been mostly a quiet market this week. You have continued to see the metals market run up continue. VIX, however, staying mostly muted here, not a big movement in terms of volatility this week. So mostly a quiet market. We also have the S&P 500 bouncing back just a little bit from yesterday's sort of sell-off that we saw. Nothing huge here, but we did get a little bit of downside in the stock market yesterday. Dow Jones, NASDAQ, again, mostly flat here. Most of the indices mostly unchanged here. And I hope everybody's doing well. Welcome to the stream. We'll be taking a look in this stream at indices, commodities, and currencies, as we always do. And if you are new, make sure to thumbs up button, subscribe, all that good stuff as we get started. And remember, if you want to check out DNA Funded, take advantage of the promo code that we offer with them, A1T20. Will get you 20% off any of their challenges, which may be right for you if you're looking for a funding option. All right, so let's see. I actually want to start somewhere that I don't usually start. Today I got something interesting happening, which is a US oil bullish reading, actually a very bullish reading. And I want to look into why this is. So we know that jobs data was not great, but we've had a sort of significant change in terms of the US oil reading. Commitment of traders data shows institutional buying. I want to take a quick look at that, see what, if I'm looking at this in terms of COT data, if I want to pull up, for example, take a look at US oil, we can see there was a pretty substantial closing of short positions from institutions and a pretty substantial increase in longs in oil. And if you've been watching my content for a minute here the last few months, I've mentioned that I'm a little bit cautious on risk markets in terms of like stocks and crypto, etc. And I also know that historically speaking, what will get a stock market to roll over a lot of times is actually a supply shock, oftentimes in the price of oil, like if oil prices are to rise. And I actually do think that there is that potential. Oil prices look really interesting to me because you have had sort of this was the geopolitical, explosion, right, happening in the Middle East. And then we saw the ceasefire get announced, and then oil prices have kind of drifted lower since. But I actually think you may have some potential for a trade here. If I get down to the 4-hour chart, you can see we've been consolidating. I do think that actually oil prices to the upside look really good. I think for me, what I would be looking for would be some sort of, let me zoom in just a little bit here. I'd be looking for some sort of sign of momentum picking up. And then there may actually be a trade here for me. Again, I have really good confirmation from the Edge Finder, so I'd love to see like this move and then maybe look to get in on the 4-hour chart. But I do actually see a lot of upside in oil prices. There's a couple reasons for this. You have in terms of, well, let's go look at this might be easier to just look at the commodities scanner and take a look at oil for a second. So if I'm looking at the oil score, we're going into a period where, okay, we have some growth metrics looking strong and inflation is still sticky. that environment is actually kind of attractive for oil prices. So if I'm taking a look at retail sales numbers, come in better than expected, services PMI is stronger than expected. Inflation we know is still relatively high. You have 2.9% year over year inflation. GDP growth has been better than expected. I believe we get new GDP numbers tomorrow. What's up, Franco? Yes, I'm here every day, Monday through Friday, and we have several hosts that actually stream. So if you subscribe to the channel and turn on post notifications, we are live for multiple hours per live stream day. I'm not always on here, but of course there's somebody here streaming, trading, etc. Oil prices are up 1.1% today. I like seeing a chart that's moving higher as a positive momentum kind of thing. So I'm watching the 4-hour chart. I actually really like the idea of potentially getting long oil prices. We have this idea here. So 4-hour chart demand found support around 62.25. Prices are at the upper end of this consolidation range. We have resistance we're sitting at right now. So I'd be really curious if we were to see this kind of move, like a breakaway move. I like that quite a bit. I may take that trade. I'll keep an eye on it. If I take that trade, I will send it as a signal inside of our VIP Discord. If you're interested in that, by the way, you can sign up on our website, a1trading.com/VIP. So let's see. Yeah, Slugmeister, I'm with you on that, right? U.S. economy, it's still, the U.S. economy is a weird one because you still have, in some ways, some bright spots like GDP growth. We'll see. We have, I believe, GDP numbers tomorrow, latest GDP numbers coming out tomorrow. 3.3% compared to 3% expected. So we have strength there. We have weakness in manufacturing PMIs, but strength in services PMIs. Better than expected on services PMIs. Retail sales were strong. Inflation numbers are sort of at expectations, but still sitting at 2.9%. That's still a nominally, kind of on an absolute basis, it's still above trend or above Fed expectations or desires, I should say. They want 2%. They're still sitting at 2.9%. NFP was weak. This is going to be the hardest thing to justify with oil prices, is you want to see strong jobs growth, but we're still sitting at 4.3% unemployment rate. So, I don't hate it. I like the idea of potentially getting long oil. So I'm going to look for that trade. Probably my top setup right now, to be honest. It's got a really good score on the Edge Finder, +9 score. That tells me that sentiment looks good. Technicals look good. Actually, real quick, let me check the sentiment score. What are we looking at in terms of put to call ratio? If I go market sentiment, put to call ratio, I want to look at US oil. So if I'm looking at oil, pretty neutral. So nothing too much there. Retail sentiment, US oil. Crowd sentiment is kind of bullish, which, that goes against, but it's one of many things I'm looking at. And then the big thing is, of course, COT data, which institutions are still pretty long oil, especially with this latest filing, right? We looked at this earlier last week. Oil futures, institutions kind of bought heavy on that. So I like it. I like the setup. I'm going to look for it. That's probably top setup for me this week right now. It's been kind of a minute since I've had a trade that I'm like, oh, I like this one. I definitely like oil. I know a lot of people are asking for gold. Gold, I could do it in 2 seconds. I'm bullish, but it hasn't pulled back. Done. But in actuality, I'm bullish because stagflation concerns are still a real thing. Geopolitical uncertainty is still a very real thing, right? But bigger thing to me is the dollar still looks not super strong, right? This is actually, I saw this yesterday, that we're currently sitting in the worst performing year for the dollar possibly ever. I think year to date, we're setting a record in terms of weakness for the dollar. Dollar's lost, like, from the highs here in January to the lows, 12.5% of value. I mean, that's a pretty substantial dollar movement. But dollar's bouncing here today. I think I've mentioned too that I think there's a little bit of upside in the dollar. There is some correlation sometimes between USD and oil prices. I would not be surprised. I mean, I've been saying this the last few days. I think the dollar may have a little bit of a short-term bounce coming in for it. But yeah, I do think Bollitt says strength to 99 to 100. So that puts us up to here. I wouldn't be surprised. I would not be surprised. I mean, we've had kind of a shift in some of the data there. Does the Edge Finder give intraday bias for day traders? Yeah, so I get this question all the time. Long story short, the Edge Finder is not a timing tool. It's not like this is for day traders or this is for swing traders or position traders. It's really not. It's really just a directional bias tool. And then we have people who are using it for day trading. We even have scalpers who use it. Scalpers, day traders. Like you're not going to get like a firing off technical signal every 30 seconds if that's what you're looking like that's not what you're going to get with Edge Finder. But if you're looking for something that helps you to scan sentiment, technicals on the daily chart specifically, and fundamentals or economic data, then the Edge Finder is top of its class. I gotta say, I'm a little bit biased, but I think that is a fair thing to mention, is that it's not time frame specific. It's not like built for the 4-hour chart. It's built for traders who are just looking to better understand fundamental analysis. Fundamentals is pretty useless in day trading. I would definitely disagree. Fundamentals is incredibly important for both day traders, swing traders, position traders, because even if you're a day trader, you want to see why day traders should absolutely, in my personal opinion, still be using fundamental analysis. It's because if you understand the bigger picture, like even though you may not trade the weekly chart and what's happening on there, if you're a day trader and you know, like, hey, the Fed is really concerned about this, and you see, let's say they're really concerned about jobs data weakening, and the next NFP report comes out and it's terrible. If you know fundamentally what that means to the market, then you have a stronger case to build even in your intraday trades. You might say, oh, this is going to likely drive prices on the higher time frames down to this certain point in the dollar. And I'm going to day trade that because I know how important that is to the fundamental, big money movements that are happening, So fundamentals are so important to day traders. In fact, I would argue that day traders need it just as much as swing traders, if not more. By being a day trader, you're fighting a lot of noise in markets because there's a lot of noise in the lower time frames. So if you're a day trader and you add the fundamental layer into what you're doing and you say, okay, this is likely to drive prices for the next 24, 48, even 72 hours. If you know how to spot that, you can still take it with you down to the 15-minute, 5-minute time frame, right? 100%. Fundamentals matter immensely to day traders if you know how to use them. People sort of like to dismiss fundamental analysis as if it's not beneficial. Sometimes, not always, but sometimes because they are hard to learn. There's a lot of learning curve that goes into it. But I know several really great day traders. Actually, almost every day trader that I do know, I know a lot of successful swing traders. I don't know very many profitable day traders. But the ones that I do know, they love fundamental analysis. Do you guys know who Kathy Lean is? She's like super legit. She day trades, super fundamentals heavy, right? So my point is, day trading, swing trading, position trading, fundamental analysis is not just for the people who buy and hold stuff for 3 months, 6 months. That's not the only sort of group. Capital hungry as well. Yes, capital hungry indeed. Heavy on the day trading side. Like just because I don't day trade, like I'm more of a swing trader. Like I'm looking for moves that might be a week or 2 weeks or 3 weeks or 4 weeks if I'm in a really good trade. But yeah, no, day trading just as valid to use fundamental analysis. Fundamentals is 80% of trading, 20% is technicals. I mean, it's to each their own, right? We know on this channel we don't discriminate. If you are a technical trader, then awesome. If your balance is 50-50, like you're 50% technical, 50% fundamental, awesome. Doesn't matter as long as you're getting the results that you're seeking, right? We don't discriminate over here. So let's see. In terms of what we've got happening here. Stock market is mostly flat this morning. Little bit of a bounce back, a shy bounce back from yesterday's down day. It was like the first actual down day that we've had in a few weeks. Chinese stocks were down initially last night and then popped here. VIX is down a little bit in the pre-market session. US stock market opens up in about 13 minutes. By the way, guys, just a quick plug. If you guys are not in our Telegram channel, we're posting some pretty good stuff in there. We've been posting some stream clips, some fundamental analysis, and I mentioned this each day recently. If you are somebody who recognizes that fundamentals are really pretty important, which they are, if you recognize that and you're like, okay, I want to incorporate them into my trading, but I don't know where to start and I don't want to spend $1,000 on a course, here is a free way to start learning to trade with fundamentals. The link right here, the QR code on your screen, scan that if it's easier for you, if you have Telegram on your phone, just scan the QR code here, join our Telegram for free. Look at what's in here. So we're like, we have a research team here behind the scenes. Like it's me and there's another guy. And all we do is we put together research and content for traders who are studying this stuff. If you want to learn for free, that's a free service to you. You don't pay a dime. You just join the Telegram. You can read about what's happening with the euro fundamentally, technically, and we map it all out to help find trades. Again, it's a free service that we are calling stuff out every single day. If you want to join that, scan the QR code, or if it's easier for you, click the link in the live stream chat right there. Please be careful of fake accounts. Don't just search our name because there are fake Telegram channels that we can't get removed. We've tried getting them banned a million times. So please make sure to use this link, use the QR code, whatever is easiest for you, but make sure to join there. Totally free. We just hit 42,000 subscribers. Holy junk. We were just at 40 like a day ago. That's crazy. Welcome to everybody who's in the Telegram. Again, it's the spot to be. It's, again, real, genuine free value. Let's take a look at the metals. Gold continues to roar, just nonstop to the upside here. I'm still sort of in the camp of waiting for pullbacks. I know a lot of people are. I don't necessarily think, like, we could just keep going. I'm not going to try and time a pullback. Gold seems like it wants to gold just seems like it wants 4,000. 4,000's way up here. I wouldn't be surprised if we continue to sort of drift in that direction. Though for me to actually take a trade on gold, the logical way to play it is to wait for a pullback. You do now have some support that we seem to have kind of formed around the, let's call it 3630 level, which is almost our new 38.2% retracement level. If you see gold make a push higher, that's going to become like, if we get a push up to 3,800, then this area just becomes a very clear level of support. I mean, it already kind of is, but I'm just saying from a fib level as well. But yeah. I downloaded and subscribed to Telegram just for the channel. Thank you, man. Mike Wilson, appreciate you, my friend. Yeah, no, it's just soak it in, enjoy it. I've got a guy who writes for the Telegram channel. Like he's a freelancer. He does really good work, and I've just paid him to help me keep people up to date with fundamentals. So it's not me doing all the writing because I've got, a bunch of things going on, but I put someone into place that is very qualified to write about fundamentals and keep all of us sort of up to date. I mean, I read his reports because they're super useful. So join the Telegram. It's 100% some of the best value you're going to get for free on the internet. But yes, there you go. Can someone swing trade with a $150 account, and what's the right stop loss? $150 account is a tiny account. I recognize that the dollar is, very expensive in certain parts of the world. I'm not, but I would say that it depends what kind of brokerage you're using. If you're using an FX brokerage, just manage your risk in terms of like map out what the loss will be in your account. And if you're risking more than like 1% per trade, it's likely to not work well in the long run. Risking 3%, 5% per trade sounds fine when you're doing it, but one bad drawdown sends you into a disrepair of an account. But yeah, $150 is, to be honest, probably too little to trade with. Again, I'm not trying to tell you can't do it. You can do what you want, but my opinion is for FX, you probably want at least 1,000, 2,000 in an account, and you definitely cannot trade gold or things that have bigger contract sizes. Like if you're trading gold, even a 0.01 is way too big for like $1,000 account. It's too big. It's really hard to risk just 1% and not have a really tight stop loss, right? It's just not going to work. I really think like that is going to be a disaster waiting to happen. I know not somebody's hearing that and like, Nick, you're killing my dreams. Look, I'm not trying to. I'm just telling you that that's like the math doesn't work. If you're trying to, you could maybe look into like a broker that offers smaller than 0.01 if you're trading gold. Like if you could do 0.001, that would be probably a better setup. I know one thing that's really cool with a brokerage that I use. In fact, actually, we can drop the link if you guys want to check out Oanda for FX. I can't trade CFDs, but you can if you're outside of the US. If we could drop the link in the chat here to sign up with Oanda. Here's why. Oanda is they're really cool. You can actually, at least in the US, I'm not exactly sure where you are, so check this, but you can trade instead of like a minimum of 0.01. I can actually trade in units. So 0.01 is 1,000 units of currency, right? Or in CFD world, I don't know how it exists, and I don't know if this is possible in their CFD platform. You'll have to do the research on this. But with the Oanda brokerage, what I love, and again, if you choose to sign up, please support my channel. Use this link. It helps me out. And they're a sponsor of mine. So I would greatly appreciate it if you choose to. If you don't have to, but there's the link if you want to support my channel. I appreciate it. What's so awesome about Oanda is that you can actually trade below a 0.01 lots, right? 0.01 lots is 1,000 units. You can actually trade down to 1 unit, I believe. But even if it's 100 units, right? 100 units of currency is essentially a 0.001, right? Am I doing the math right there? I think it is. So you can trade smaller than 0.01 lot size. Now, again, I know this is not exciting conversation. You're like, I'm never going to make any money on a 0.001 lot size, but you'll learn something. If you trade too big of a size, like if you try and trade a 0.01 on gold, like gold CFDs on a $200 account, you're going to blow the account. It doesn't work. The size is too big on a 0.01. Like I know 0.01 doesn't sound big, but the way it works with gold prices, like the contract size that CFD is working on, it's too big for a $200 account. You're going to blow it up because you can't like do a meaningful stop loss. Like if you're doing that, your stop loss has to be like on the 1 minute chart has to be like right there, right? Which doesn't, that's like, again, you're fighting every difficulty when you're trying to do that. There's no harder way. And again, I'm not trying to like bash the dreams, but I'm telling you, there's no harder way, and don't make it this hard on yourself, than trying to trade a $200 account on a gold CFD brokerage. That's like the hardest trading you're ever going to do, because you're trading the super low time frames, which is really difficult. You're trading gold, which is difficult. You're trading with a tiny lot size or tiny account size, so you don't have any room to be wrong. That's super difficult. Don't do that to yourself. That's why trading is impossible if you're trying to trade a small account. Like you might get lucky and have like a great run and double your account, but even if you double your account, if you go up to $400 from your initial 200, you're still trading too big of a size, and it's probably going to blow back to zero. Again, not trying to dissuade you or to discourage you in any way. I'm just trying to be very real with you. Like it's not a recipe for success. It's a recipe for disaster. Anyways, let's see what else we can get into here. So my eye today is definitely on oil. Oil is a setup for me, 100%. NASDAQ's getting a bullish reading on here, but it's too far away from my entry prices. If I'm looking at NASDAQ, I am looking for a pullback down to the 50% retracement or even the 61.8. If I'm looking at the NASDAQ for longs, that's my entry area. So we have some room to come down. So I am bullish, but not interested in trading it up here. Okay, so I like indices more so than I did a week ago. We had some good data that came in, kind of shifted things around a little bit. But I do not like indices at all-time highs here. I'd much prefer to wait for that pullback. If we get it, we might not. Oil prices really look good to me. I love the idea of looking for a bigger break to the upside here. Little bit of a trend line action sort of happening here. You got a little bit of a break. I actually like the idea of watching the 4-hour chart. I could see trading this setup. So if I take that trade, I will share it inside of our Discord group. The Discord is not free. We offer a lot of free stuff, but the signals are not free. If you want to get trade updates from me when I take them, here's how you can do so. We'll change, if we could change the QR code to the talk to. If you guys want to speak directly to a member of our support team, we'll drop a link here in the chat to where you can do so. You can speak to my team, let them know that you're interested in getting access to the signals. They can give you pricing information. They can get you payment plans if you need to, or set you up with a monthly price that's easy for you. But if you want to join the VIP group and come trade with me, I would love to have you. We have people from all over the world in the chat, in the Discord. So easiest way to do so is to click this link here, or in just a second, you'll be able to scan the QR code as well to where you can speak directly to a member of our support staff, get it set up with a membership. Would love to have some of you guys. So yeah, you can scan the QR code or click the link. Just let them know you're watching the stream right now, and they can get you a nice discount on joining the group. Okay, guys, in just a second, we are going to be passing the stream over to our next show host. Of course, it is FX James, and he's going to be sharing some of his trade ideas that he's looking at. So stick around. We'll be right back with James just after this quick break. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How's everyone doing? Happy Wednesday. Hope you're all well. It's hump day, halfway through the week. So, we had a bit of a shake-up yesterday with Powell. I didn't watch it. I didn't really pay that much attention. That was my bad. However, it was very clear what was said in terms of rate cuts. Powell absolutely didn't reinforce a rate cut narrative. And we did see, or currently are seeing, the dollar rally on the back of that. To be honest, it doesn't change my view. I think I am willing to put more weight on the press conference that we saw from Powell. Yes, rate cuts probably, or very likely, aren't going to be as aggressive as what we maybe thought or the markets thought. We're obviously seeing that get priced out. However, I am still bearish on the dollar. We are still, in my view, going to get rate cuts coming. Actually, let me just pull up the CME FedWatch tool. I'm not sure what Nick was talking to you guys about before, so I do apologize if I'm repeating what Nick's already said. But yeah, I mean, look at this CME FedWatch tool. We have got a 94% expectation, probability, chance, whatever you want to call it, of a 25 basis point cut in the next meeting, which takes place on the 29th of October. So my view hasn't changed. I'm still selling the dollar. I'll show you a couple of positions I'm in. In fact, I think I showed you them last week. I'm not sure. I can't remember. Some of them aren't looking so great now. We have Australian dollar CAD longs. I think Nick's in this one as well. I've been talking about Australian dollar, Canadian dollar for a week or two at this point. Not RBA, sorry, the Australian inflation print came out at 3% early this morning or last night, depending on where you are in the world, which was very beneficial. It just feeds into the hawkish RBA narrative. I'm currently long euro dollar, which isn't doing too hot right now. I'm not going to touch this trade. If it hits stops, it hits stops. So I mean, it's not a huge position. It's one of those things if it doesn't work out. Euro Aussie, same thing here. We had this one's getting pummeled two different ways to be quite honest with you. We've obviously got the dollar inflow right now, which is negative for euro. We know that they are essentially inversed in some aspects, or in most aspects. So as we see the dollar gain value, we're seeing the euro get hammered as well. Then we also have the, the Australian interest rate that obviously came out in favor of the Australian dollar. So this trade definitely took a hit. Obviously, it's offset by a couple of other positions. I'm long on the S&P. And I'm still in my yen, or sorry, not yen, the JPN 225. So we had an initial trade here. We had the pullback on the BOGA on Friday. And I decided, you know what? I still like it. I'm going back in. So I'm just waiting for these highs to break, and then I can maybe look to trail stops a little bit, maybe to break even at this point. But yeah, that's it. I'm in a couple of stocks as well, but these are long-term holdings. I bought UPS. I would love to get Nick's opinion on this. I don't really know anything about it, but as a long-term hold, I'm willing to be a little bit more loose on what I want to see. So UPS is obviously a big company. As I always say, I'm not a stocks guy, so please don't take what I'm saying as gospel or too seriously. But we're at the 2020 lows from COVID. It's used globally, I think. Actually, it's not. I don't know. Is UPS global, or is it just an American thing? Either way, it's a big company and it's used all the time. So I thought, you know what? I'm going to pick up a little bit. It's only a small position. I think I've got like $250 in the position right now. So very, very small. But I thought, you know what? I'll pick some up while it looks cheap, and we'll see how it goes. Anyway, let's go back to FX, since I don't really want to get into a stock conversation. Hello, guys, by the way. Sorry, I've not replied to any of you. Slugmeister, good to see you, my friend. Ball Out's here, as always. Good to see you, Ball Out. Hope you're well. Youngest millionaire. Gareth says, where's Frank? I don't think Frank's with A1 anymore. I'm not in a position to really give you an answer. I'm not 100% sure, but I don't think he's with the company anymore, just from what I've heard. Anyway, Aussie, New Zealand. I've been looking to be a buyer of this market for a while. It was on the edge finder. It seems to have dropped off, however. That's fine. So I was looking to be a buyer. However, the problem is, there really hasn't been an entry opportunity for me since the pullback we had here back in mid-August. And back in mid-August, I wasn't overly interested. So unfortunately, I've missed the run and I haven't managed to enter into a pullback. So I'm on the sidelines just watching this one. The pound dollar, I was looking to go short. It seems I've missed the entry on that one. The reason I wanted to go short pound dollar was for a couple of reasons. I wanted to hedge off my dollar short risk, and I thought, or I do still think, which is getting displayed here, that the pound is going to lose its ground against the US and its other, or the euro and the dollar anyway. Just because the UK is facing some fiscal problems, there's political problems as well. There's a lot of underlying issues within the UK. But when I say issues with the UK, it's not like we are looking at a specific thing. Like with the dollar, we can look at the inflation reading and we can look at the labor market, and we can clearly see there's a bit of a shift or a bit of a problem there. The UK doesn't really have that much of a clear thing. It's more of what's going on under the surface, if that makes sense. Same thing there with euro pound. As I mentioned, I would expect the pound to continue to lose its ground against the euro and the dollar. So I'm looking to be a buyer of the euro pound at some point, likely on the next pullback. New Zealand dollar, I don't really have a bias in this one. So I'm just sort of sat watching this one. I'm not really interested in going in for a trade. We do have the RBNZ that's expected to continue rate cuts though, but I mean, it depends how fast is the RBNZ going to cut rates relative to the Fed. Oops, sorry, I knocked the mic there. I'm not sure if you heard that. We'll see. Pound Swiss, I'm actually not really interested in this one either. I was considering going long, but I just can't really justify it. I mean, this market's just getting beaten and beaten and beaten. The only real thing of interest I've got is sort of the support that we're coming into here, but yeah, generally speaking, I'm not overly bothered about taking a trade here. Pound New Zealand, not really. Dollar Swiss, I'm actually still in my dollar Swiss. I completely forgot about that, to be honest. Dollar Swiss and dollar yen, I would still like to be a seller of both. I was short dollar yen at one point last week, but closed it pretty much at break even. As soon as I get some sort of signal to get back on more heavy dollar shorts, dollar yen will be where I'm going to first. You work for UPS, long-term buys at the psychological lows only. Yeah, that's pretty much what I've done, Cole J. Again, please don't go and buy UPS because I showed you that. I could be completely wrong. There could be some massive problem with UPS I just don't know about. But I think it looks like it's on a bit of a discount. So we'll pick it up and see what happens. Can you give some bias for the S&P? Yeah, just give me a second. It wasn't my trade, so I just need to look at the reason it was sent out. Fed's recent communication shows higher for longer stance, but without signaling new tightening. Bond market volatility remains high, and retail sold heavily after FOMC, showing pressure from rising yields. Sorry, I'm getting my words all mixed up today. Inflation is sticky but moderating. Equities are still seen as partial inflation hedges, especially cyclicals and large caps, which feed the 500. So there you go. Again, this wasn't my trade, so I don't really have much of an idea on the trade itself and why I took it. Oh, sorry, why it was sent. Other than obviously the reason that we gave. So gold and silver, I'm pretty convinced gold's going to 4,000. I mean, I just don't see a reason it wouldn't, because you could argue that yes, the Fed might not be cutting as aggressively as maybe we once thought, but they are still going to cut, in my opinion, and on the CME FedWatch tool is indicating that as well. I think what we'd have to do, if you're not already in gold, the key thing is obviously paying attention to inflation and the labor market. The labor market is what has been prioritized. I mean, that was obviously very clear in the press conference when Powell called this a risk management cut, that downside risk to the labor market have risen. He didn't sound overly concerned with inflation, but obviously that's still something we need to pay attention to. So if we do get some positive data for the dollar and we see gold come down further, possibly to the lows here, it's around 36.34, or more towards the 200 moving average, I would be a buyer. Even if the dollar was strong at that point, I would still take that risk. I've been sat on the sidelines of gold for so long. If I get the opportunity, I will take it. Obviously, I'm not saying it'd be a massive position, but I'd be willing to give it a go. Silver, it's just heartbreaking, to be honest with you. I mean, I say this on pretty much all the streams because it just hurts. Emotional damage. I was calling silver to $40 at the start of the year. Then I was looking at 42. And then I think maybe 1 or 2 weeks ago, I was talking about 44. And I've just missed every single target. I haven't managed to get anything on the commodities. Pretty much the whole year, I've missed out on all of it. Missed out oil shorts, silver longs, and gold longs. No bien. UPS, America needs UPS. Yeah, exactly. I think it is quite a core company, isn't it, really, of the way that I want to say the way the US works, but you know what I mean when I say that. Yeah, transportation and logistics, that's it. Doesn't matter what the Fed wants. America needs gold to go higher to balance the debt. That's a good point. Aussie US dollar. Oh, I would be a buyer of Aussie US dollar on the next pullback. Oh, well, I say the next pullback. We're in a pullback now, but on the next signal that I get to be a seller of the dollar, I would love to be going short at some point, maybe around here. So again, we had higher inflation come out of Australia this morning at 3%. The RBA is currently quite hawkish, especially relative to the Fed. I mean, again, the Fed sounded quite hawkish yesterday, but I'm struggling to put any weight on that just at this time. So yeah, I would be a buyer. But again, for the dollar, for me to be a bit more involved or more heavily involved in the dollar, I do need to see more data. So I need to see what NFP next month will be, how unemployment goes, JOLTS, PCE, CPI, etc., etc. My gold target within 5 years is 8K. It wouldn't surprise me. I mean, yeah, I suppose 5 years is reasonable for a doubling in its value. I think gold is just one of those things. It's just going to continue rising, in my opinion. When I say that, I mean, obviously, we're going to see pullbacks at some points. But I think generally speaking, as more of an investment, I think gold is a pretty good buy. I would still buy gold and silver on dips and accumulate small positions. Someone in the higher So when the higher ups or UPS decided to not make a deal with Amazon. Oh, okay, right, I see. Australian dollar CAD. Australian dollar CAD is already on there. Still a lovely, lovely buy. So with the Australian dollar CAD, I mean, we've just spoken about the Australian dollar. I'm still very bullish on it. I think the Canadian economy is also in a very rough spot, although I haven't checked their heat map in a little while. So let me just double check. Yeah, I mean, it's got 12%, 12.5%. I think this actually might be the lowest reading I've seen on an edge finder heat map since the heat map came out. I could be wrong, but I'm fairly sure. I don't think I've seen one lower than that. So everything is just bad. I mean, the only slightly supportive thing is manufacturing PMIs, which are still at 48.3. So it's not in a good spot, really. Obviously, it's a slight increase, but not great. The current account deficit continues. Exports are still down. Yeah, CAD, definitely not a long position for me. Regan, same opinion. I think pound CAD could also be a good buy. So while, yes, I'm quite negative on the pound, I think generally speaking, the UK economy is in a significantly better spot than the Canadian economy. The Bank of England seems quite steady on their rates as well. And actually, again, I haven't researched the Bank of Canada's stance actually in a little while. Let me just do that quickly here, just so I can give you updated information. Bear with me for one moment. Bank of Canada, yeah, so that's that dovish. Bank of Canada cuts rates to 2.5 amid rising unemployment and trade uncertainties, signals further easing with terminal rate near 2%. So we've probably got another half a percent or 50 basis points left in the easing cycle. So absolutely, I'd be selling Canadian dollar pretty much against every other G7 currency. I don't think there is another one I wouldn't sell it to. Even the dollar, I would be a buyer of dollar CAD. I mean, the market here has been quite nice for buyers as well. So yeah, we'll see. We'll see. Do you see spot gold making top around 3,810 and correct to 350? Let's have a look. So oops, let me get rid of the magnet. 3,810. And then you're asking where pullback to 355. It could happen. The thing is with gold, and this is the trap that I found pretty much the past year and a half with gold, that I've been sat saying, sorry, I'm getting my words all mixed up here. I want to see a pullback, like a 50% pullback or a pullback to previous all-time highs or whatever it is. There's been so many places where I wanted to see a pullback go to, and it just didn't happen. It just continued to rally from that level. So it makes it very, very difficult from a swing trading aspect to say, should we be more aggressive and just look at something like this and maybe just be buyers off 3,700? Because, after this rally, yes, it looks due for a larger pullback, but I've said that so many times. Are we going to get it? Who knows? And then, maybe, yes, you could be a bit more conservative and wait for a larger pullback to a 200 moving average around 355, as you said. DXY pulling back here before continuing down. Yes, I am a big believer that the dollar will continue to be pressured. I do really think this is just repricing. It's not a trend. It's not a change in trend. It's just repositioning inside the markets, reducing some short positions. But overall, yes, I would still be a seller. Take a look at pound CAD. Yeah. Tell you what, let's just do an edge finder checkup before we go any further. So China 50 is back bullish. I was looking at China 50, I didn't take it because the market ran off without me and then it disappeared off the edge finder. Pound CAD is getting a bullish reading. It's not anywhere near what it was though. I'm fairly sure Pound CAD had a reading of 12 or 13 at one point. So that is a little bit of a red flag for me just to see it's been downgraded in terms of ranking. COT data's flat, retail's flat, we've got bearish seasonality. I mean, I don't really pay attention to seasonality on G7, G10 currencies anyway. However, overall, yes, it does seem like it's a bullish or slightly bullish landscape. So again, with the Canadian dollar, excuse me, sorry, with Canada and the Canadian dollar, I don't think we're going to see much of a revival until we get some real changes in the economy. So we need to see unemployment coming down. We need to see exports picking back up. We need to see pretty much a full refresh of their situation, which again, it could happen, but it's not going to happen quickly. But then what we also need to account for is the fact that it's all already public knowledge. This has been the situation for a little while now, so it's priced in. So now we need to look forwards to say, okay, what is the Bank of Canada going to do? Likely they're going to cut more, sure, but again, that's it. We need to wait for more data from Canada. So I wouldn't be a buyer right now. I would maybe look to buy at these lows. If we don't get these lows and we come lower, maybe buy at this level of support, and again, just monitor incoming data from Canada. You could even argue that we could buy here. I think that's a little bit aggressive. It's too aggressive for my personal appetite, but yeah. Keep mumbling when I speak. It's hard to understand. I'm sorry. I don't mean to mumble. I have this problem. I speak a lot faster than I can think. So sometimes it does come out as just a mumble because my brain's trying to catch up. I'll try to speak a bit slower and more clearly. ES scalp, sell setting up, tight risk management. What time is it? Oh, we've already had New York open. How did that go? Oh, that's German. We need Dow. Yeah, slightly bullish, nothing overly interesting. Nasdaq's down again. Nasdaq's just not managing to make really much of anything here. I suppose it'll be the New York traders coming in for the day on or post Powell last night. So just trying to think if there's anything going on. I don't think there is. I think we've got relatively quiet news today. Let me just double check. I don't think there's anything going on. I know obviously last week was hectic with the Bank of Canada, Bank of Japan, the Fed. Fairly sure we had Bank of England as well at some point. I wasn't really paying attention to that one though. Let me just quickly check what we've got today. Don't really have anything. We've got new home sales coming in 10 minutes for the US. We've got a Bank of England speech, but it won't be a major one. And then we've got Fed Daily speaking later on today as well. But yeah, overall, I wouldn't say it's going to be a busy one. Okay. So let's see what the put call ratio is on the indices after yesterday. Because as I said, I'm long on the S&P. It seems to have recovered quite well off the downside that we initially saw. So if I pull it up here, I'm saying that as it's coming down lower on New York, that's fine. But yeah, we had initial downside, obviously, when Powell was speaking, minor recovery, and it seems like we are getting more selling pressure come in as the day continues, which is fine because this is quite a long-term position. We've got a pretty wide stop, actually, for my general trading style. So I'm quite happy, really, to just let it run. If it stopped, it stopped. If not, then great. I do have the Nikkei, which is smoothing out the equity curve quite nicely. But yeah, generally speaking, I don't really have anything to do because, as I said, I think the main things I had were dollar shorts, Australian dollar longs, and Canadian dollar shorts. But it's all, the movement's kind of happened now. So it's more just a case of I'm waiting for the next catalyst to get in. So ES scalp on the H4. Sorry, Bola, I read your message and just completely forgot to check it. So on the H4 scalp, yeah, I suppose you could look for maybe something to the 50 or 200 moving average. It looks like we're about to break these lows on the H4 as well. Could signal that we're going to see a follow through on bearish momentum. So let's have a look at China 50 or CN50. I was initially looking at this 50% retracement, which obviously never got hit. So looks like I've missed it. It could have been a buyer here, which is a bit unfortunate. In fact, I don't think I've ever placed a trade on this market before, but I would be willing to. If we could come down something like this, I'd be quite happy to be a buyer. I mean, the stop is quite wide, but I'm happy to take it. And that would put me at quite a bit of exposure on the Asian markets, obviously with the Japanese market and the Chinese market as well. So something to factor in. What's oil doing? I suppose actually another factor for the Canadian dollar strength is the oil strength that we're seeing. Although I'm not sure what's going on with oil. I'm not sure if there's a reason that we're seeing strength or if it's, what's this? Free futures, whole gains getting oil gains 1%. Okay, so some supply risks for oil. So yeah, that will be helping to support the Canadian dollar. I wouldn't expect that to be a long-term thing. Maybe just a intraday type thing where we see the Canadian dollar gain some strength due to oil. But yeah, overall, doesn't change my bias at all. I'm still liking the idea of being a seller of the yen. I've just not managed to really catch anything. I was looking at Swiss yen, but again, here, there really wasn't anything for me to trade off. CAD yen, quite like the idea of being a seller of CAD yen. CAD Swiss, my bad, not CAD yen. CAD yen here is tricky. I think we might be able to catch a short, but even so, it's kind of two weaker currencies against each other. It doesn't provide that much value. Yeah, see, these markets are very, very stretched. New Zealand CAD got absolutely destroyed on that one. Pound yen. Oh, we looked at pound yen. I can't remember when it was actually. Might have been on my stream on yesterday, but we're looking at pound yen at the 200 moving average. But the problem with pound yen is, although we get paid swaps, so it's not too bad to hold, it's still a very sort of hard market to trade in terms of it's just very, very choppy. Although we do have this drift to the upside, the price action itself is still very, very difficult to gauge. The behavior is a little bit nasty. So I'm not too interested in being involved with that one. The dollar. There's a couple of different things with the dollar. It depends really what time horizon you're looking at, because we could see a larger pullback into these lows. So around 100.5 to 99.5 in that sort of area, we could see a pullback too. Obviously, that's the weekly time frame though. We are also seeing buyers stepping in off this 17-year trend. So I would be looking to get a little bit more heavily short if we can see rejections around this level that I just mentioned, so 99.5 to 100.5 area. If we start breaking above these highs and we are still getting positive data for the dollar, then obviously I'll cut and accept that the idea was wrong. So we'll see. But yeah, it's just a little bit of a concern to me that we've come down to this level and we're seeing a very, very sharp rejection. We failed twice now to break lower, or at least to hold lower. So it's a bit of a concern. And it might be worthwhile hedging some dollar short ideas or dollar short trades with some dollar long positions, something like euro dollar shorts, pound dollar shorts, New Zealand US dollar shorts. That could be quite beneficial. But again, it's trying to get into the markets is the tricky thing right now, because there's just not really any opportunities in my opinion, or in my view. Seems like euro dollar might be catching a bit of a buy here, but yeah, we'll see. So put to call ratio has loaded. We're coming into extreme fear, which is quite nice actually for my long position. So for those of you who don't know, put to call is essentially the same as the retail sentiment. You generally want to see, generally want to counter trade it. So if we're seeing the put to call ratio showing extreme fear, generally you want to start being a little bit greedy. That doesn't mean going full port or full leverage. That just means you maybe want to take a contrarian approach. Again, similar to retail sentiment, when retail is stretched one way, you generally want to try and take the opposite way. It's interesting the UK 100 or the FTSE's getting 100%. I assume that's not right, and we should be using the put to call here. Or maybe it is. Interesting. The FTSE's got extreme greed as well. Strange. Anyway, not too bothered. I don't really trade the FTSE. It's a horrible market. So let's see. Got dollar CAD is actually getting a really, really strong economic score here. Score of 10. So maybe dollar CAD is one to pay a bit more attention to. I wouldn't want to buy it right now because obviously we've already had quite a large run. But if we could see something more like this, I would contemplate being a buyer. And again, this would just hedge off some of my dollar short risk. So pull into sort of the 50 and 200 moving average. And then with the idea that we're going to break these highs and continue higher. Again, whether we get that is a very different thing. We do have Marco coming on the show in about 1 minute. So I'm not going to be here much longer. So I don't really think I should get into any more analysis, but euro pound's bearish, which is interesting. So I'm going to stay away from euro pound slightly because I was looking to go long, but if Edgefinder's bearish, then I'm not going to take it. I tried that with the DAX when I wanted to buy the DAX. The Edgefinder was bearish and I got wiped out of that position very quickly. You waiting for that exact setup? And dollar CAD, very nice. There you go, Max. Great minds think alike. The cooker's already in dollar CAD. Amazing. I'm jealous. Good catch. Yeah, my positions are very, very flat right now, so I'm kind of just waiting for progress. But yeah, it's a slow occurrence. Yeah, I don't think there's anything else. Copper. Wow. Wonder what happened with copper. Also, there's some supply issues with copper as well, just like what we saw with oil. But wow, copper's rallying. Copper's doing really well. I wonder, actually, how many people decided to just accumulate on this drop. Because again, I've been talking about copper for a while, not in terms of I want to trade it or I've got really any ideas. It was just that trader's gut instinct. It really put me off buying here. It felt like a trap. It still does feel like a trap, to be honest. I wouldn't be surprised if we end up coming closer to around $4 on copper. And again, that's not backed up by anything. It's just my sort of feeling about it, just based on how the chart looks. I'm not a copper guy. Anyway, ladies and gentlemen, thank you for having me. As always, it's been a pleasure to talk to you all. I hope you all enjoy the rest of your days. You've got Marco coming up just after me. So guys, have a good one. Stay safe. Don't get margin called. And I will see you all tomorrow.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello everyone, welcome to my segment. Let me just open my screen sharing. Kind of forgot to do it. Okay, we should be up. Let's see. Yep. So I hope everyone is doing well. Quick trade updates. So I have 4 positions running. 3 of them are short the CAD. Aussie CAD, nice profits. USD CAD, today it's actually going up quite nicely. I'm targeting 1.399 as the first possible take profit. Euro CAD is around break even, but that's okay. I still like the euro and I still hate the CAD. And this experimental UJ trade is running nicely as well. I do have a take profit set, but this is not part of the of my regular strategy. This is just something I'm experimenting with. So what has been going on in the markets in terms of the news? We had Fed Chair Powell speaking. I did a bit of research on it, and there was some concern about inflation. So pretty much his speech was in line with what was said in the last Fed meeting. Okay, so inflation is still a bit of a concern. That means the dollar should gain value, and it is gaining value. Okay, so the current narrative is, what is the Fed doing? It used to be the tariffs. The narrative for Q1 and Q2 was pretty much just Trump, trade wars, tariffs, but now we have switched to what is the Fed gonna do. Currently, the Fed is cutting, but with a hawkish mindset. And that actually makes the dollar gain some value, because I'm guessing people were overly short. People were very exposed to shorts on the USD. So now they are paying the price. One more thing that is very important to mention. So what is the date today? 24th of September. And who is one of the biggest players in the currency markets? So if you guys can put in the comments, maybe you know who I'm referring to, but if you guys can write down in the comments, who do you think is one of the biggest players in the currency markets? So I'll give you a couple of seconds, and then we will see who got it correctly. I'm sure most of you will have correct answers, but I'm referring to the big players that move the markets at the end of the month. Okay, so let's see if you can guess. I'll give you some time. And because of that reason, because of that massive buying, we're actually seeing an update on the DXY, and we already had a pretty significant push up. So from these lows on the DXY, we went up 1.75%. Nothing drastic, it's not like a big explosion, but it is in line. It is in line with my forecast of us breaking the 96.4, retracing, possibly ranging around, possibly going a bit higher. So let me check the comments. Let's see. So Luis says Apple. Elafi says big banks. Johan says banks. So Luis got it correctly. It is big companies such as Apple. So the big companies, they tend to hedge their currency exposure at the end of the month. They buy a lot of US dollars. So because during the month, companies like Apple, they sell phones throughout the world. So they get CAD, they get yen, they get euros, they get pounds, they get pretty much every single currency, and then they need to exchange it for dollars. Usually they exchange it by the end of the month. So you get this seasonality occurrence where the dollar can gain value going into the last few days of the month. So big companies hedging their currency exposure, buying US dollars. And that is another reason why currently I'm kind of maybe even bullish on the dollar. I'm neutral/bullish. So Max says Marco is still in USD CAD. Yep, still in USD CAD. Hey, Elafi, what's up? Okay, let's see. Institutions. Elafi says it sounds logical. Yes. Manufacturing in other countries, institutions, gold. So you guys want to see GBP/USD and you want to see gold. So let's first do GBP/USD. I don't know why you're so interested about GBP/USD. For me, it's not such an interesting currency pair, if I'm being honest. I mean, on the dollar, if I was heavily bullish on the dollar, I would be looking to short I would be looking to short the GU, but I'm kind of neutral / bullish. On the pound, I'm very bearish. So the pound, I think, is bearish. Short term, let's check short term. I don't remember. Yeah, short term bearish and also long term bearish. So I think the pound is going to get sold off going into the next few weeks, going into the next few months. But I would rather maybe get back in Euro GBP buys like this than to sell. I mean, we're at a resistance level, but I think this would be an interesting play compared to selling GBP USD. So selling GBP USD, I think we're a bit flat. We haven't really moved a lot from this range. We have just been stuck in this range for, let's see, around 124 days. That's quite significant. What does the edge finder say? Let me check the top setups. GBP USD. Okay, let's see. Neutral. Yeah, neutral reading from the edge finder. So not my favorite currency pair. Definitely not my favorite. If I had to give you a bias, it would be a bearish one. But I'm not looking to execute positions on GBP USD. Gold and silver. What's going on? Are we at the top? Is it time to short gold? Is it time to short silver? Absolutely not. So I would not advise anyone, unless you're super proficient with 10 years of experience with shorting gold or silver, I would not advise anyone to short this market right here, because it still looks super impulsive, still looks super bullish. We're pausing a little bit. I don't think that means we will just crash lower. I would like to see a pullback to buy. So hopefully this sort of a pause turns into a pullback like this. And then I can get in on buy setups. So I pretty much have the same story that I have had from the last couple of weeks. Just a massive explosion. I didn't get in time. I kind of missed out on the entry, and now I'm trying to catch up with the price. I'm trying to buy it. I think the overall narrative, the overall fundamental narrative, is still a bullish one. I think there's still major concern about inflation. Powell yesterday in his speech actually talked about inflation. So we can quickly bring it up on the edge finder. Let me show you. CPI, rising inflation. Okay, so definitely rising inflation and inflation above target. So we have actually been above target for like 5 years, if I'm not mistaken. Maybe even more. Can we see more? No, we can't. That's okay. So yeah, we have been above target for a really, really long time. Also, if you guys want to check out the edge finder, if you want to get access to trade signals, Aussie CAD, USD CAD, Euro CAD, these were all trade signals inside of the A1 Discord. So you can use my discount code, which is MARKO. So make sure you check it out. You get a nice discount. We can work together. We can trade together. I can teach you exactly how I'm viewing the markets. I can give you some signals. I can give you some advice so that you can start getting into trades like these. So that's it for the quick edge finder and Discord plug. Let me check the comments. Okay, so GJ and US 30. So let's see. GBP, JPY. It looks a bit flat. To be honest with you, on the yen, I don't currently have a massive opinion. So on the yen, I'm kind of neutral for right now. As you may have heard or may have read, the PM, or I think the Prime Minister Ishiba, has resigned. They're looking for a replacement. And depending on who that replacement will be, we can get some volatility on the yen. On the pound, as I told you at the beginning, I'm very bearish on, but this chart looks to be in an uptrend. It looks to be in an uptrend. Let me see what the edge finder is saying. GBP, JPY. Neutral reading. So I would say I don't have a good trade idea here. Also, be careful. If you go short, the swaps will be high. So you can get very high swaps with this position. If you type in GBP, JPY, check out the carry trade. So look at the interest rate divergence. It's pretty high. So this should be a very, very expensive short. And also, fundamentally, I would sell GBP, JPY, but technical analysis looks bullish. We look to be continuously going up, following this 20 MA, respecting the 20 MA. So that's already a mismatch. Fundamentals are telling me to sell, while the technicals are telling me to buy. Okay, so not my favorite thing to look at, not my favorite pair. I think there's better opportunities out there. Indices. What is my opinion on the indices? I saw US 30 right there. There was a request. So let me run through all of the indices. For the NASDAQ, my opinion is the same. I'm looking for pullbacks. I'm looking to get in. I want to buy. Maybe I can move my alert a bit higher, but I don't think I would buy at this level. Yeah, let me see. What kind of a retrace would that be? 2.8. No, I think I need the price to go a bit lower. I think to this level of support, and then I would be interested to potentially get in on some buy setups. So NASDAQ has been flying away without me. No opportunity for me to get in. This pullback was not big enough. I wanted to see a bigger correction, maybe to this level, but then we just bounced off and kept flying. So what is pushing this market? Probably artificial intelligence, massive investments from NVIDIA, Apple, OpenAI, Microsoft. All of these big companies involved with technology are heavily investing into AI. Will it pay off? You never know. For some of them it will, for some of them it won't. It will eventually be a bubble, but until it's a bubble, we must buy. So that is generally how the stock market goes. Until there's a bend at the end of the trend, you just buy. You buy with a defined take profit and defined stop loss, or a trailing stop loss. So I know there's a lot of people calling for a correction, doomsday, massive crash, and it will happen eventually. But until it does happen, you're going to be waiting for months, years, maybe even decades. So why not just get in on the trend with a defined risk and try to capture some of this push to the upside? So don't be a perma bear. Perma bears get all of the attention, but they make zero money. That's the definition of being a perma bear. So broke people who just kind of want attention. That's at least from my experience from Twitter. And I'm pretty much with the same opinion on every single indice. If you look at the SPX or the S&P 500, overextended, but very bullish. So I'm looking for pullbacks potentially to, let's say, 6.5, maybe 6.35, somewhere around this level. I would probably look for buy setups. I do prefer the NASDAQ because I think NASDAQ has more opportunities to trend to the upside compared to the S&P. US 30 was a request. US 30, for me, it doesn't look so much overextended, but I'm not, again, looking for buy setups. I would first like to see a bit of a pullback, a bit of a correction, a bit of a discount if I get in. Of course, I'm looking for buy setups, but I just think the overall stock market has been a bit overextended, a bit overbought, possibly losing some steam. So I'm not super happy to get in right now. You know, it looks bullish. It looks bullish. I just don't think now is the time to buy. Russell, rate cuts should benefit Russell the most. Small companies, unprofitable companies, that's what the Russell is about. Those companies can then take off massive debt, cheap money, cheap debt, artificially inflate their stock price. Russell goes up. That's the mechanics behind it. And that is why you could see a big opportunity with the Russell. We are now sort of stuck at this level of support, or sorry, resistance. I was talking about the Russell when we were here, how it's the only index that has not yet touched the all-time highs. Well, now it is at all-time highs. So maybe my approach is a bit too conservative. Maybe I need to readjust my approach. Maybe I should consider getting in on smaller pullbacks instead of looking for those big sell-offs of 4, 5, 6, 7%. Something for me to think about. I do prefer getting in currencies. You know, currencies are kind of my main thing I trade, but I would also like to get in on a nice juicy buy setup on the Nasdaq. So I think I have I think I have pretty much the same opinion as Nick on indices. Now, as far as the DAX goes and the Nikkei, the DAX super boring. So the DAX looks super flat, super boring. Nothing is happening. I know some people on the last stream they were requesting the DAX. I would say there's very little opportunity for a long-term swing trader on the DAX because you're just gonna get chopped around inside of this range, inside of this chop. But up to you. I personally think there's better opportunities out there. You may be asking, am I looking to buy the support? No, I personally am not. The DAX is not known for being a explosive index and just trending like the Nasdaq, just exploding higher. Oh, come on, you're not going to give me more data. So do I want to risk it? Do I want to get stuck inside of this? Do I want to pay negative swaps? Because guess what? If you're holding a buy setup on the DAX, I believe you are paying negative swaps. You should be. So it's an expensive position to hold. It's not free. And the Nikkei is just super bullish, exploding higher. Now, as far as the Japanese market goes, I told you about Ishiba. I told you about him resigning. I told you about the new prime minister being voted. Okay, so that all creates a bit of uncertainty. For some reason, the Nikkei doesn't care. It's just flying higher. This looks actually very good, looks very bullish, respecting the 20 MA nicely. See, this is why I like the 20 MA. Sort of dynamic support, and it gets respected quite nicely if the price is trending. So, am I looking for buy setups? No, personally, it kind of looks similar to the Nasdaq. Looks a bit overextended. Looks a bit too bullish, right? So I'm being patient on the Nikkei as well. Am I a big Nikkei trader? No, I'm not. So I would much rather execute a setup on the Nasdaq than on the Nikkei. And that's kind of it for the indices. Not much else to talk about in terms of the indices. Ballout says Marco DXY to 99 to 100, then more sell-off to come. Let's check it out. Let's check out the DXY. So DXY, Ballout's target is 99 to 100. So this is the range, the target range. Okay. I would say it is possible. I would say it definitely is possible, but I wouldn't say it's highly likely. Again, end of the month, big companies hedging their currency exposure, buying US dollars, they're collecting a lot of other currencies. They need to exchange them for your US dollars. They need to buy the dollar. So you could see some short-term bullishness during this end of the month. But this is just a few days. You know, today is already the 24th of September. You have a couple of days until the weekend, and then Monday and Tuesday, which are usually not the most active days. So most of the hedging is going to be done today, tomorrow, and on Friday, potentially. You need a massive catalyst for this to go up. What would that massive catalyst be? The short squeeze, the people that were massively short into the Fed meeting, I think the short squeeze already happened. So what would push us into this territory? I'm not sure. I think we could see this maybe hit the lower level and then sort of range around. What I don't see as a highly likely scenario is a massive uptrend or a massive downtrend. I think sort of being a bit neutral / bullish is the best position on the DXY right now. So maybe you can write down, I know you talked about it in the A1 Discord, but if you can maybe write down a couple of words why you think it's going to hit that level in terms of the fundamentals, in terms of the catalyst, what is going to be the catalyst to push this price higher, I would be very interested to know. Okay, Gerald wants euro dollar. For sure, we can do euro dollar. But before that, I want to talk to you guys about today's sponsor, which is going to be DNA Funded. Okay, so this is an account that I have. It's for demonstration purposes. It's a 100K account. I do have a 50K DNA Funded account that I'm using to test my ChatGPT signals, but this one is 100K, and it is specifically to show you guys the platform. So 2 trades running. It is Aussie CAD and USD JPY, basically the trades that I have on my personal account as well. And what I really wanted to talk about is the platform. So this is my first time using TradeLocker, and it's a really amazing platform. So DNA uses TradeLocker, and very easy to use, very intuitive. And you know, the best part about it is if you want to place a trade, it automatically calculates your risk. So you can put in how much you want to risk, 1%, and then you just put in the stop loss, take profit, you can put it in or not, and you press buy or sell. So very, very easy to place a trade. The interface is very nice, and it's fast as well. If you do want to get a discount on a DNA funded challenge, you can use our exclusive discount code, which is A1 Live. Exclusively for you guys that are watching these streams, 25% off is what we have for you. So if you want to expand your trading capital, you don't have to go crazy with the 100K account. You can start with the smaller accounts, see how you do. And I would say it has one of the best execution platforms in the game. So yeah, definitely try it out. Good luck. If you don't yet have a trading edge, or if you're not sure about your trading edge, then it's not for you. But if you have experience in the markets, DNA Funded is a safe prop firm, reliable prop firm that you can use to expand your capital. Also, if you're wondering how much I risk per trade, what do I recommend people risk per trade when doing a funded challenge? Well, I recommend the 2-phase challenge, and I usually risk 1%, both for phase 1 and for phase 2. And then if you get on the funded stage, you drop it down to 0.5. Whoop. Let's see, 0.5. The reason is, as a swing trader, I don't take a massive amount of trades. I think my average is maybe 2 to 3 trades per week. So I want to give myself at least 10 losses until I blow the challenge stage, and at least 20 losses until I blow the funded stage. If you're a scalper, if you're taking 10 to 15 to 20 trades per week, then drop down the risk. So risk appropriately. But for us swing traders, I think 1% on the stage 1 and stage 2 is completely fine. Getting back to it, running through my watch list, we talked about the NASDAQ. We talked about gold and silver. Euro GBP, I don't want to talk too much about, and we had the request from Gerald, which was euro dollar. So let's do that one, and then we can continue. Euro dollar, I have a target in mind. I'm bullish. My target is 1.22. Okay, so that is my target that I want to see get hit. Am I bullish or am I in a buy setup? No, I think there's better opportunities out there. I'm bullish on the euro. I think the euro right now is a strong currency. Let's take a look. So 30%, 33% of the numbers are coming in better than expected. Right now, short-term, euro looks bad. But long-term, I think we're looking healthy. So if you look at the GDP trend, so just a second. Okay, we're going to wait it out. My point was, long-term data is showing me euro is bullish, but also long-term data and just my fundamental bias for the dollar is neutral / bullish. So that means I'm bullish on the euro and I'm neutral / bullish on the dollar. That is not really a recipe for a trend. That's kind of a recipe for more of a range. So when I'm looking to buy or sell, I'm looking to buy the strongest currency and sell the weakest currency. Good example, Aussie CAD, USD CAD, Euro CAD. I'm buying the strong currency, I'm selling the weak currency. Let's see if we loaded. We did. Euro. Positive GDP. Okay, so positive GDP overall, not the best GDP, but it is better relative to some of the other currencies. Unemployment for the euro has always been high, but it has been kind of flat. So even in a downtrend, if you zoom out a bit, if you look at the last 2 years, definitely in a downtrend. That's good. You want to see that. And inflation, I think it should be in a downtrend. Yeah, kind of, flattening out exactly around the 2% mark. So that is okay. Euro I think it's a healthy currency, especially relative to the pound and the CAD. So Paul says, are you opposite about the retail sentiment data? Yeah, I'm the same as Nick. So what you want to do is you want to do the exact same thing as the institutions, but you want to do the opposite thing, the opposite compared to the retail. That's why in the top setups, if you go to, let's say, USD CAD, actually for USD CAD, COTs are negative. So the institutions are short, but the retail is short as well. So it looks at the COTs, commitment of traders, and the retail positioning. Maybe we can find something a bit better. Aussie CAD? No. Euro CAD? Yeah, COTs are selling. But anyways, the methodology is you want to do the same thing as the big players and the opposite of the retail. I'm interested to see something I look at quite heavily is the US dollar commitment of traders data history for the US dollar. It's actually on a downtrend. There was some buying of the dollar, but then they sold quite a lot of it last week, as far as I can tell. Yeah, minus 10% in US dollar long positioning. That's quite heavy. So maybe they were short squeezed at that time. I'm not sure, but it doesn't go in line with my personal forecast, which is more bullish than bearish. Interesting to see this. And overall in the downtrend as well. See, from let's say March to now, definite downtrend. It's just another confluence. Does it mean you can base your whole trade idea on what the big players are doing? I wouldn't go that far. I would just use it as an added confluence. So you can look at technical analysis, fundamental analysis, sentiment analysis, seasonality analysis, 4 different things. And there's a lot more you can look at, but that's already 4 different things that you can implement into your analysis. That's why trading is so cool. You can trade in many, many different ways. You can build the trading edge in many different ways. Andreas says, what's up, Marco? Any thoughts on Aussie fundamentally? Looks pretty strong lately. Well, I can do quick analysis right now. So for short term, I go to the Aussie economic heat map. Short term bearish. So only 28% of the data is coming better than expected. But let's check the long-term health of the Aussie. GDP is okay. GDP looks nice. We can go back the last 2 years. It's positive. Looks okay. Looks healthy. It's not negative. Unemployment. Let's take a look. I would say flattening out, maybe rising a little bit. Take a look at the last year. I would say it's okay. It's not so good, but it's okay. Inflation, Aussie, AUD, dropping. So inflation is in a downtrend, which is nice. You want to see that, okay? So inflation is falling around the 2% mark, right on the target. That's good. I would say long term, the Aussie is doing well. I'm bullish on the Aussie, and I'm expressing that through Aussie CAD long. So this is the position that I chose to express, being long Aussie, short the CAD. Crypto, doing nothing. Crypto is pretty boring. Bitcoin is flat, has been flat for quite a long time. It hasn't followed up with the huge push in the NASDAQ, which is interesting to see. Also, people say Bitcoin is digital gold. Well, riddle me this. Why did gold have an explosion and why Bitcoin stayed super flat? So it's not digital gold. I thought that Bitcoin was digital gold or becoming digital gold, but it's still not there. The correlation is still not there. It's still a pretty risky asset. It still sort of acts as a high-risk stock, and it usually flies with the NASDAQ. Not sure why it hasn't flown now. Ethereum had a massive explosion. Now it's flattening out. This was also due to US companies copying MicroStrategy, copying Sailor, buying Ethereum to artificially inflate their stock price. So that's kind of done now. We have had a pause. We have had sort of flattening out of the price action. As far as the crypto market goes, I'm not looking for buy setups. I'm not looking to add on to my investments. I'm not looking to get into like long-term buy and holds. I'm just being patient. I think Bitcoin is flattening out. I think it can pull back a bit. I think we can go to these levels. If we do pull back, I'll look to add to my investments. I'll look to buy at 100K. I think it's a nice, heavy area of support. You know, it's a nice psychological level, 100K. Everyone is looking at it. It's a round number. There's going to be a bunch of orders at the 100K level, so maybe front run a bit. Yeah. So crypto, not so interesting right now. I know you guys like oil as well. Oil looking flat, heavily impacted by geopolitics. So oil is not my favorite thing to look at. 10-year is 10-year yield. Now, the 10-year yield, bond yield, of course, is creeping higher. That means kind of the big players, the investors, are possibly losing confidence. They're selling US bonds. Also, one interesting phenomenon. If you go to the 1-hour chart, what happened on the 17th of September at this time? We had the Fed meeting. What did the Fed do? They cut interest rates. Well, shouldn't cutting interest rates lead to a lower yield? It should, but the bond market is completely controlled, especially the long end, meaning 10-year, 20-year, 30-year. It's completely controlled by market participants. So even though the Fed cut interest rates, the investors, the bond vigilantes, sort of, to say, they decided inflation is up, inflation is above target. See, now is not the time to cut interest rates. We have been above target for a long time. So they are losing a bit of confidence and they're actually selling bonds. So it has a completely opposite effect on the bond market. And that's very interesting to see. Just goes to show that the bond market is has a massive influence on the US economy and is completely controlled by buyers and sellers. It's not controlled by Trump. It's not controlled by the Fed. It's not controlled by the government. It's controlled by buyers and sellers, which I like. I kind of like it to be that way. It's a free market. So wanted to quickly comment on that. Volatility is getting a bit stale here on the VIX. So, I mean, there's not a bunch of activity. There's not a bunch of opportunities. There's not a bunch of movement. The biggest edge would be possibly buying indices short term, holding them for a short amount of time. Buying gold, buying silver is also the best place right now. But the rest of the market is looking a bit sleepy. It's looking a bit corrective. So if I had to rank, where do you have the biggest trading edge? Right now, I would say buying gold and silver on pullbacks and selling the CAD. I think that provides the biggest trading edge right now in these markets. So if you have any last minute questions for me, you can put them in the chat. I'm approaching the end of my segment, but I think I covered most of it. Okay, I think I covered most of it. I won't be here tomorrow, so I'm traveling tomorrow and on Friday. You can catch me next week. I will be live streaming pretty much every day next week. We can also take a look at the calendar now for the end. We have a couple of events, but nothing. Maybe the inflation print here, price index on Friday. Next week is NFP. So be mindful of NFP next week. It's going to be a big one. It's going to be volatile. It's going to be very important for the Fed situation. I told you the current narrative is, what is the Fed doing? So any event that is tied with the Fed and the interest rate decision is going to be volatile. And the NFP is the biggest event that is tied to the Fed and the interest rate decision. So thank you for watching. Make sure to check out DNA Funded if you want to buy a challenge. Use our discount code A1Live, get 25% off, and I will see you next week in another stream. See you.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.